and Ritu Singh. These are the top headlines from the startup space. PB Fintech, the parent company of insurance platform Policy Bazaar and lending marketplace Paisa Bazaar, reported its first ever net profit at 37 crore rupees in Q3 FY24 compared to 87 crore rupee loss in Q3 FY23.
Fidelity has further marked down the value of its holding in e-commerce platform Meesho to $3.5 billion. Fidelity had recently cut the valuation of Meesho to $4.1 billion from $5 billion.
A 12,500 crore rupee support package for electric vehicles likely this budget. Sources say that the scheme could have a 2-year tenure. The subsidy per vehicle likely to be lower compared to FAME 2 trucks and tractors could also be included in the scheme.
Consumer robot maker iRobot to lay off nearly 350 employees, or about 31% of its workforce, with founder and CEO Colin Angle also expected to step down. The layoffs come a day after the $1.7 billion Amazon iRobot deal was mutually terminated over regulatory hurdles.
Elon Musk's Neuralink finally implants a wireless brain chip in a human for the first time. The technology aims to help those suffering from debilitating conditions like paralysis to interact with their surroundings. Musk claims the initial results are promising.
Microsoft has named former general manager of Call of Duty Joanna Faris as the president of game publishing unit Blizzard Entertainment, which it bought last year in a $69 billion deal. Those were the headlines that we're tracking for you this evening. The electric vehicle industry is likely to get a boost in the interim budget. We learned from sources that the government is expected to announce a 12,500 crore rupee support package for the sector on February 1st. However, the subsidy per vehicle could be lower compared to the phase 2 of the FAME scheme, which is set to expire in March this year. Now, the growth in sales of electric vehicles is only expected to continue to grow in 2024. Sample this. Last year, the country witnessed the sale of over 15 lakh electric vehicles across various segments, almost a 50% growth versus 2022. So what does the sector need to continue this growth uptrend? We are joined by Dr. R.K. Mishra, the co-founder of Yulu, and Dev Arora, the co-founder and CEO of Alt Mobility. Also with me, my colleague Ritu Singh. Gentlemen, thank you so much for joining us on the show today. As I was just saying at this point, Mr. Mishra, let me come to you first. Sources have told CNBC-TV18 that there could be a 12,500 crore rupee support package for the EV sector, but the subsidy per vehicle could be lower versus phase 2 of the FAME scheme. Do you think this is a good enough impetus? Will this be beneficial?
So first of all, I think it's very good that there was some discussion that FAME may not continue. So I'm very happy, and we all lobbied for it, that FAME must continue. We are still very early stages of EV adoption. But more importantly, it is how it is being given and where it is targeted. It's very important that we understand why EVs need subsidy, because EV is expensive. 40% of the EV cost is in battery. And especially for two-wheelers and three-wheelers, EVs essentially can be unstoppable battery. And we should focus primarily on aggregators. For example, people who are aggregating for delivery, services and things like that. So if we focus on swapping, then the cost to the end user comes down. As the cost to end user comes down, then essentially adoption will be much more, and the real objective of the government will be fulfilled, which essentially is to have more electric vehicles on our roads. So I think we need to have a battery swapping policy. Is not very clear. We don't have clarity on incentives, taxation, certifications, and network expansion. So if we get that clarity and focus on incentives for swapping, then the cost of electric vehicles will automatically come down. Then we don't have to worry about whether it is 1 lakh electric vehicle or 3 lakh electric vehicle, how much I give, and who to give, who not to give. No discrimination. Focus on battery swapping. Give the incentives on the swapping. Especially when there is a dichotomy. If you buy a bike with the battery, GST is 5%. But if you buy a battery which is swappable, the GST on sales is 18%. This is very, very clear anomaly which needs to be addressed. And GST on transactions. If you go for
sure, Mr. Mishra, we take your point, and Mr. Mishra, we take your point. We'll come back to you for paucity of time. Dev, let me quickly come to you on your thoughts. Of course, the industry is going to be happy if the FAME subsidy is extended, and that's what they want. But, if you were to look at the budget asks, do you expect that to come this time around? Or what are your other top 2 to 3, items on your wish list?
Well, it's not just the industry which is going to be happy. We hope the consumers are going to be happy with the subsidies that are coming in. India is positioning itself on a geopolitical front to be an emerging leader in technologies, and EVs is basically the future of automotive. So we believe that both on the demand and supply side, I hope the government will continue to build on the subsidy policies, both on the demand side where you have FAME2 and on the supply side where you have PLI, including the infrastructure that is required, the vehicles that's required. So FAME2 should certainly continue. And the growth that we're going to see in this sector from a total cost of ownership perspective, EVs are becoming more and more attractive. CapEx cost is higher. To bring the CapEx cost at parity with combustion vehicles, this is why the subsidy is largely utilized. And we hope that it will continue to kind of dominate the demand side trends. We also think that from a financing standpoint that EVs should come under priority sector lending that will allow more banking and financing institutions to participate in this space. There's a lot of uncertainty that financing institutions have today with regards to offering finance to a normal electric vehicle. So interest rates are quite high. That's largely because there's no clarity around the secondary market and residual values. So we believe that policies should be put in place, not just PLI-based schemes, but also to look at energy storage. So after an electric vehicle battery is reaching its end of life, what happens to the energy storage? Can it be used in renewables and where new tenders are coming out from the grid? So we believe that energy storage second life is a major push that the government should be looking at as well.
Absolutely. All right, Dr. Mishra, if I could just come back to you. We've got 30 seconds. If you could quickly tell us, you touched upon the charging infra. And in fact, the draft policy has seen a lot of pushback with many companies saying it favored the bigger players. And especially when it came to standardization of batteries. Are you expecting the budget to address this in any fashion?
I don't think budget will talk about standardization because that's not the mandate of the budget. This is part of the policy which for now has been put on back burner because it's too early. Too early in the evolution of both technology and adoption of the batteries. We should not standardize, otherwise, the winner takes all situation happens. I think let technology, and also technology is changing very fast. So we should not standardize, but however, there should be an effort that over a few years, standardization will emerge essentially on its own because people will start using what is better and cheaper. So I don't think there is too much, government should not try to interfere where industry can do, a better job. But government should nudge that we need to install, like for example, connectivity standards and charge points and their standardization is happening, which is pretty good. But battery size and technology should not be standardized.
Sure. Unfortunately, we've run out of time. But Dr. Mishra, Dev, both of you, from priority sector to the PLI scheme, there's lots on the table. We'll see, what gets addressed in this budget. Thank you very much for sharing your thoughts with us. All right, so we'll move on from the EV sector to the Agritech sector, which, the agriculture sector is estimated to constitute nearly 18% of the country's GVA in this financial year, and that is the government's latest estimates. The sector grew at an annual average rate of 3.7% from 15 to FY23 and at 4% in FY23 itself. The exports from the agriculture sector, they also surged to touch 4.2 lakh crores this year. Now, with the budget coming up in just a few days, the focus very much is on this agri-tech sector, on the ways to digitize the agriculture sector with emerging technologies, support for innovation, financing and whatnot. So joining me now to talk about what they're expecting from the budget are Shashank Kumar, the co-founder and CEO of Dehat, and Mukul Garg, the founder at Agrim. And also with me is my colleague Shruti Mishra from the Mumbai studio. Gentlemen, welcome to the show. Shashank, I'll start with you. Top 2 to 3 expectations from the budget, because last year we saw a lot getting addressed from the green growth theme to an agriculture accelerator fund and whatnot. What are you expecting this time around? Shashank, I think you're on mute. If you could unmute yourself and tell us what you're expecting from the budget.
So thanks for having me. Nothing new. in just, I think, it's a similar thing what has been discussed during the last budget. So the first point is FPO. Almost 7,600 FPOs are already formed in India. Next 3,000 on its way. Even as they have, in fact, we are working with almost 1,000 of FPOs. But I think digitization of FPOs and basically, I think all the IoT and the IT related tools for FPOs so that they can leverage the developing Agritech platform for their own self-sustainability. That's the point number one. Two, the climate piece. We all have been, I think, experiencing the impact of climate change. As per FPO, by 2050, the yield on the major crops like rice, corn, wheat, likely to be impacted by 15 to 20%. So there has to be a very holistic 360-degree framework from the government as a kind of incentive for the farmers and all the stakeholders to adopt climate smart agriculture practices, whether it's IoT, whether it's precision agriculture, whether it's generating carbon credit and monetizing carbon credit, so all those things. So climate smart agriculture, I think there has to be a big bet on that piece. The third one is export. The growth of agri-export has been consistent. It's 8% on year-on-year basis against 4.6% annual agri growth. I think the momentum has to be maintained with stable policy and a little bit of support on the freight side, considering the recent phenomena what we are seeing at a Red Sea level. And last but not the least is the digital public infrastructure, right? So where state and central governments, they need to be in sync. I think those are my four top.
All right. So digitization of FPOs, smart framework for farmers, a long list that you just mentioned. Let me quickly go to Mukul now. Mukul, first tell us what have been the big challenges for you from a policy point of view, and what are your and the sector's big asks from the finance minister?
So the first focus, I guess, we as a sector has been credit deprived overall, right? So I guess the focus, which was the agriculture credit increasing to 20 lakh crore, right? I guess that should get pushed to 25 lakh crore, where the overall credit access to the farmer is increasing along with the supply chain, right? So that is the first focus, right? In terms of the infrastructure, I guess the first mile cold storage, right, is something which bites the farmers really hard, right? So I guess that has to be solved deeply on the infrastructure side. As Shashank mentioned, in terms of the data infrastructure and the policy around public data sensing, public satellite data, right? That is something where, the hard investment has to happen to make sure the companies or the startups, those who are coming on the new age digital side, right, they can focus on building the right innovative products for the farmer, right? So I guess these are the three broad areas where we think the finance minister should look at. And along with that, around the green agriculture, which is overall around the global warming issue, right? So the use of pesticides and fertilizers, right, has to reduce over the period of time. So the benefits of using the biofertilizers and biopesticides, right, that should be made very easy in terms of reducing the GST rates there and ensuring that the supply of products are there. So these would be the main ask.
Okay. Thanks for that. But Shashank, let me quickly come back to you on this digital public infrastructure for the agri-tech sector. Is there a specific ask that the industry is presented to the finance minister, or what are you expecting in the budget specifically? Very briefly.
So any GPA has already provided a lot of funds to state governments to build this digital stack or agri stack. As we know that in India, agri is a state subject, Ritu. So here I think the only ask is the simple framework where the central government and state governments, they need to be synchronized between what they are talking and what they are basically doing at grounds. So various state governments, they are deploying their own model of this digital public infrastructure. I think it just needs to be synchronized as per a single framework so that I think everyone can get benefited.
All right, Shashank, one final question, if you could quickly answer that. India's agricultural exports have grown at a CAGR of 6.6% from FY18 to FY23, reaching, $52.5 billion in FY23. What kind of policy interventions can help the export ecosystem, and what should be prioritized to maintain and improve agri-exports momentum?
stable policy, because obviously in FY24 we have seen a lot of, let's say, introduction of bans, removal of bans, all those things. So stable policy, I think that is one. Two, there are many countries which are looking at India for a consistent supply to solve the global food safety and security issue, but it's a vicious cycle, right? So there's a little bit of freight subsidy to the exporters, so that I think the new geographies can be cracked. And last not the least, because obviously from India as an exporter, the strategic locations are Middle East and Bangladesh or Southeast Asia, where credit discovery of those sort of local merchants not readily available. So while ECGC, there is an instrument, but again, if government can do something through the policy, right, so that the better credit discovery can be established for the exporter, that will certainly fill the void.
All right. Unfortunately, we've run out of time, but Shashank, Mukul, thanks very much for sharing your thoughts here on CNBC TV18. Arunati, it's over to you in the Mumbai studio.
Thanks for that, Ritu. On that note, it is time for us to head into a short break, but coming up next, alternative investment platform Grip Invest backs 10 million led by Stride Ventures. We put its founder on the hot seat to know more about the company's offerings, revenue, and growth outlook. Stay tuned.
Welcome back to Startup Street. Grip Invest, a D2C investor-first digital investment platform for high-yield, non-market-linked alternative investments, recently raised $10 million in its Series B funding. The round consisted of $8.5 million via fresh equity and convertible notes, as well as $1.5 million in venture debt. The round was led by Stride Ventures, with participation from new investors LC Nova and Multiply Ventures. Existing investors Venture Highway, Agritech Capital, and Advantage also participated in the round. To talk to us about the growth plans at Grip Invest, joining me now is its founder and CEO, Nikhil Agarwal. Also with me is my colleague Arundhati. Nikhil, welcome to Startup Street. You have Stride Ventures on board and Venture Highway, Agritech Capital, and Advantage arrive as third-time investors. What does their backing mean to you, and what are the reasons that have driven investor interest in the company? If you could quickly take us through the key highlights of the past year.
Thank you so much for having me. I think it's, we're a fixed income investment platform, and investors such as LC Nova, Stride, and Anicut have tremendous experience in actually providing institutional finance on the fixed income side. So for these investors to back us, especially, is a representation of how the fixed income market is changing and the growing appetite and interest for retail investors to participate in fixed income in institutional quality credit. The last year has been really interesting, predominantly coming out of new regulation from SEBI called the OBPP, or Online Bond Platform Providers Framework, that has allowed businesses like ours to offer fixed income investments at small ticket size to retail investors. The ability to have this license, offer a completely digital platform, I think is transforming how investments will be made in India, where people will now have a choice between fixed income in the fixed deposits manner, but fixed income also through corporate bonds or other debt instruments that provide them a higher return and better risk reward.
All right. Hi, Arundhati here. If you could quickly take us through the allocation of the funds. First, tell us, how do you plan to use the raised capital to scale your business operations, and how do you plan to focus on driving customer awareness?
Yeah, I think Arundhati, the second point you mentioned is probably the most important. I think it's around customer awareness. We have a new product category. We are trying to, in our view, investors had either the 6% FD available or market-linked volatile returns where you could hope to make 18%. What we're trying to introduce to them is a totally new category of investments that lie between the super safe fixed deposits and the volatile stock markets, which can give you higher returns. So customer awareness is a big part of the allocation of capital. This has to come from also a very high level of transparency. And the way we are achieving this is to make sure every investment instrument on our platform is actually credit rated by rating agencies like CRISIL, ICRA, CARE. We're also spending a lot of effort in providing information on what this means in the hand of the investor.
Okay.
I think the layer of what we're trying to do also on my education side is really around experience. Investors like to invest in products through frameworks like SIP, mutual funds. How do we replicate some of these experiences from the stock market to also the fixed income market?
Sure.
I think that's the priority we have.
Nikhil, picking up from what you just said, you also plan to expand your product distribution and build additional investor-friendly features on Grip's tech platform. If you could quickly take us through the new offerings, what's in the pipeline?
Yeah, if I told you that SIPs do not exist for corporate bonds, you may be surprised. We talk about SIPs so commonly as investors.
Yeah.
It's such a large market, but it's never been done for corporate bonds or for other fixed income instruments. Those are the kind of things that we're trying to solve for, and really be able to provide not just a great investment option, but also in a manner that users can easily adopt it, can try with very small investment amounts and build a diversified portfolio. Similarly, today in the world of e-commerce, everything has to be digital, has to be online, has to be instantaneous. Sure. We want to build those kind of customer journeys. We're a fully digital D2C DIY platform and providing information and that experience end-to-end users.
Yeah. And if you could quickly tell us, till date, you've facilitated over 800 crore rupees in investments. Talk to us about the mega trends you're seeing in terms of investor behavior, shift to digital hybrid platforms and others. Also tell us how Grip Invest stands at the forefront of this wave.
Yeah, no, that's a great question. I think the biggest trend we are seeing is investors want to take control of where they're investing. I think they have previously had to rely on some form of advice from a bank relationship manager or some advisor. But I think that is changing. Like with everything else that we purchase, we also want our investments to be something that we control. We ran a survey among our users, and the number one feedback that we got was we like to do our own research and we like to be in control of where we invest. I think we've picked that as one of the key mega trends. The second mega trend is adoption of higher yielding fixed income. 70% of India's investments or savings are in fixed deposits, which make maybe 1% above the inflation rate or 2% above the inflation rate. I think there's a large appetite for investors to say, we love fixed income, we like the consistency of it, but we want to have higher returns over the inflation, and where can we seek those options? So those are two mega trends that we are seeing from the investors.
All right, Nikhil, unfortunately, we've run out of time, but wish you the very best with all your growth plans. And many thanks for joining us on Startup Street today.
Thank you so much.
Okay, on that note, it's a wrap on this edition of Startup Street. From Shruti, Arundhati and me, it's a goodbye. Thanks for watching. Stay with CNBC TV18. All your news and updates will continue on the other side.